everyone, I am Ribka Elizabeth Munthe from 12 Accounting 5. I would like to explain a little about financial statements. Financial statements are documents or reports that describe the financial condition company a single accounting period which is used to describe the company performance situation. The objective of financial statements is knowing how the company operates financial condition in certain periods. Function of the financial statements are 1. To evaluate business condition and business development. 2. To assess business condition that require additional capital. 3. As a report of accountability to stakeholders. 4. As a means to fulfill its obligation. 5. Facilitate decision making. 6. As a tool for obtaining capital. 7. As a tool for monitoring cash flows. Okay, kinds of financial statements are: at the first, income statements, one kind of financial statement that is used to provide information about the financial performance of a company during a certain period of time. The format is gross profit minus operational expense and other expense. Forms of income statements are single step income statement and multiple step income statements. Okay, let's discuss the first one, the single step income statements. Single step income statement is a format where all revenue and expense are grouped into a single group to calculate net profit or loss. The format is net income is equal to revenue plus profit and expense plus loss, and then the result is deducted. The profit and loss per month consists of two main sections. At the first is revenue. Revenue is all revenues listed during a specific period. For example, is sales or products or service and interest on investment. Then 2 is expense. Expense is all expense or is for the period. For example is raw material costs, rental costs, and marketing costs. Okay, we continue with the second form of income statements. Is multiple step income statement. Multiple step income statement is one of the financial statements that present information about the revenue, expense, profit, and loss of a company in a certain period, such as months and years. Multiple step income statements calculation formula is 1. Gross profit is net sales minus cost of goods sold. 2. Operating income is gross profit minus operating expense. And 3. Net income is operating income plus non-operating expense. Well, then the second form of financial statements is cash flow statements. Cash flow statements is a financial statement that shows the cash inflows and outflows of a company over a period of time. Basically, the statements of cash flow help investor, financial analysis, and company management to understand how the company generates and use cash during the period. Kinds of cash flow statement is 1. Cash flow from operating activities. 2. Cash flow from investment activities. 3. Cash flow from financing activities. Well, then 3 form of financial statements is statements of change in equity. Capital statements is a financial statement that show the change in company capital over a period of time. In general, there are a couple of components: is beginning equity, additional equity, use of capital, net income, and dividend. Well, the forefront of financial statement is balance sheet, profit, and overview of a company, assets, liabilities, and shareholders' equity as a snapshot in time. The form of the balance sheet is stable and controlled. The five form of financial statements is not to financial statement are documents that publicly trade company use to communicate financial statements contain information about assets owned by a company, revenue, expense, and information about financing provided by shareholders. Okay? Thank you for attention.